The global silver market is in chaos. Prices are exploding, vaults are emptying, and now China has made a move that could redefine the future of a tech driven world. But is this a natural supply crunch, or is it something far more sinister at play, involving not just geopolitics but the very financial institutions we trust? Welcome to my channel. Today, we are dissecting the silver market, not just looking at the headlines, but digging into the fundamental shortages and the conspiracy theories that are gaining undeniable traction. This isn't just about investing, it's about the backbone of our modern economy. So, first, we are going to talk about the undeniable physical shortage. Let's start with what's verifiable, the physical supply crunch. For 5 consecutive years, the world has consumed more silver than its mined. We are talking about a cumulative deficit of over 800 million ounces since 2021. To put that in perspective, that is roughly 1 year of all global mine supply just gone. Here's the critical point. Silver isn't just primarily mined on its own. Roughly 70% of it is a byproduct of other metal, copper, lead, zinc. So if copper prices are low, miners don't dig more. Even if silver is soaring, supply is incredibly inelastic, and demand, it is insatiable. Solar panel growth is exponential. Electric vehicles need vast amounts. 5G infrastructure, medical devices. Silver is the irreplaceable conductive element. Factories are reporting critical inventory levels, some with only weeks of supply left. The world's strategic reserves, the vaults in London and New York, are at decade lows. This isn't just a speculation, these are publicly verifiable numbers. This physical reality creates immense pressure. So, now we want to know what's China's silver gambit in this and how he's geopolitically controlling everything. Now, let's inject geopolitics in China. China, starting January 1st, 2026, they are implementing draconian export controls on refined silver. Imagine controlling 60-70% of vital commodity. That's exactly what China does with silver. Their new rules, only massive state approved companies producing over 80 tons annually and with huge credit lines can export. Smaller players are instantly cut out. This isn't about tariff, it's about control. Critics are calling it weaponization of silver, akin to how China previously leveraged its dominance in rare earth metals. The goal? To hoard silver for its own booming green energy and tech sectors, giving its industry an unparalleled advantage. So, if global supply is in deficit and China, the largest refiner, decides to keep more silver for itself, what happened to the rest of the world? Supply shocks, even higher prices, and potential manufacturing slowdowns for Western companies. Elon Musk himself has hinted at the critical nature of industrial silver supplies. This isn't just a market shift, it's a strategic move. So, what's coming? The paper market and the manipulation debate. This is where the conspiracy theories truly ignite. Many long term silver investors believe the price has been artificially suppressed for decades by paper silver, futures contracts on exchanges like COMEX. Here's the core argument. For every ounce of physical silver, there might be hundred and even thousands of paper ounces traded digitally. As long as most people don't demand physical delivery, the system works. But what happens when everyone wants their actual metal? So we have seen in recent events that fuel these theories. Sudden trading halt, silver highs hits highs, and then bam, trading is paused. Coincidence or protecting short sellers who are losing billions? Exchanges raise the margin, the collateral needed to hold future contract. This forces smaller players who bet on rising prices to sell their position, often crashing the price temporarily. Is it a risk manager or a is it a risk management or a deliberate squeeze? The conspiracy camp argues these are the tools used by powerful banks who hold massive short positions to keep prices low. Regulators conversely say these are necessary measures to prevent market instability when demand for physical delivery outstrips available supply. The proof for many is the divergence. Physical silver in places like Shanghai now commands a significant premium over the paper price on Western exchanges. The physical market is screaming shortage, while the paper market tries to maintain order. So, what does this mean for you? So, where do we stand? We have an undeniable physical supply deficit, a major geopolitical player consolidating control, and a paper market grappling with the consequences. This isn't just about price volatility, it's about the potential for real world impact. So, for investor, this creates a unique environment. For industry, it's a wake-up call for securing supply chains, and for all of us, it highlights that fragility of our interconnected, resource-dependent world. Is it a great conspiracy, or simply the consequences of years of undersupplying meeting exponential demand? Now, exacerbated by strategic geopolitical moves, the truth, as always, is likely somewhere between a perfect storm where both fundamental and manipulative forces are at play. So, what's the conclusion? What do you think? What do you think? Is China making a strategic power play? Are banks manipulating the market? Let me know in the comments below. So, if you found this breakdown insightful, and please hit the like button, subscribe for more deep dives and into critical markets, and share this video with anyone who needs to understand the brewing silver storm. Thanks for watching, and I'll see you in the